So are you thinking about buying a new home in 2025? It's an exciting prospect for sure. But what happens if you find that absolute dream home before you've managed to sell your current one? Well, there's a brand new tax rule you need to know about, and it could cost you thousands. Let's get straight into the one number that you absolutely have to understand.
And there it is, 5%. Now, this isn't just a tiny little increase. It's a new, higher tax rate that can add tens of thousands of pounds to your upfront costs. Honestly, it's a bit of a trap that a lot of buyers might not see coming, but don't you worry, because we're going to show you exactly how to handle it.
Welcome, everyone. The experts over at My Tax Accountant have put together this whole discussion to help you navigate what can be a really tricky situation, buying a new place before your old one is sold. We're going to break down exactly what the new 2025/26 tax year changes mean for you in plain and simple English. Okay, let's lay out our game plan. First up, we are tackling that new 5% tax trap head-on. Then, we'll get into the two big taxes you need to know about, stamp duty and capital gains tax. After that, we'll have a frank look at the real-world challenges of juggling two properties at once. And to finish, we will map out a clear, simple path to help you move forward with total confidence.
Right, to make this all crystal clear, let's use a real-life example. Let's meet Sarah. She's a freelance designer living in Hackney, London, and she's just found her dream home. It's got the perfect garden studio for her business. The only problem, the market's moving so fast, she feels she has to buy it now before her current flat is even on the market. Let's see how this new tax trap is going to affect her.
So what is this trap all about? Well, as of October 31st, 2024, the government went and increased the stamp duty surcharge for anyone buying an additional property. And because Sarah Well, even if just for a short while, owned two homes, she's about to walk right into it.
The old surcharge was 3%. The new one, it's a full 5%. Now, that 2% difference might not sound like a huge deal, but trust me, when we're talking about house prices, it can literally mean finding tens of thousands of extra pounds, right when you can least afford it.
So, how does this 5% trap actually play out in real life? It all comes down to something called stamp duty land tax, or SDLT. This is really the first and often the biggest financial hurdle you're going to face. But don't sweat it, we're about to break it all down for you. Take a look at this table. It shows the new reality. That column on the far right, that's the one that is absolutely crucial for anyone in Sarah's situation. You see, that 5% surcharge gets added on right from the very first pound. So for a property over £250,000, you're suddenly looking at a 10% tax on that slice, which is double the standard rate.
Okay, let's run the numbers for Sarah's £600,000 dream home. With this new surge charge, her stamp duty bill comes to a whopping £47,500. Just to put that in perspective, without the surge charge, she would have paid £17,500. That is an extra £30,000 she has to find right now.
Seeing a number like that can be a real shock to the system. But before you start to panic, there is a massive, crucial question we need to answer. Is there any way to get that extra money back? And the good news is, yes, you can get that surcharge back. But, and this is a big but, you have to play by HMRC's rules. Here's exactly what you need to do. 1, your old property must have been your main home. That's non-negotiable. 2, you've got a 3-year window to sell it after you buy your new place. And 3, once you've sold it, you have to apply for that refund within 12 months. Stick to those timelines, and you'll get every penny back. The key is to budget for that huge upfront cost, but know that there's a clear path to getting it back.
Okay, so you've got your head around stamp duty. Phew. But there's another tax you really need to be aware of, especially if selling your old place takes a bit longer than you'd hoped. It's called capital gains tax, and it's all about the profit you make when you sell.
So, what on earth is capital gains tax? Well, it's actually pretty simple. If you buy a house for, say, £200,000 and you sell it a few years later for £500,000, you've made a £300,000 profit or a gain. CGT is the tax you pay on that profit. Most of the time, homeowners don't have to worry about this, but as soon as you own two properties, the rules start to change. And the amount of tax you'll pay depends entirely on your income. Basic rate taxpayers pay 18% on their property gains, while higher rate taxpayers are looking at 28%. That 28% can be a really significant chunk of your profit, so it is always a good idea to get some professional advice to make sure you're not paying a penny more than you have to.
Now, I know what you're thinking. Hang on, isn't selling my main home completely tax-free? And you are absolutely right, it usually is. It's thanks to a wonderful little thing called private residence relief. It's a fantastic tax break that that shields the profit you make on your home. But you guessed it, there's a catch. The moment you move out, a timer starts ticking. Here is the number you need to burn into your brain: 9 months. You have a 9-month grace period to sell your old home after you've moved into your new one. Any profit you make in that time is still covered and is tax-free. But after those 9 months are up, the taxman could come knocking for a share of any further increase in value. Stay with me, because the next point might just surprise you.
Okay, here is a pro tip that could literally save you a fortune. When you own 2 homes, you get to tell HMRC which one counts as your main residence for tax purposes. You have 2 whole years to make this decision, and it is a huge deal. By choosing wisely, you can protect the property that's likely to make the most profit from capital gains tax. If you don't choose, HMRC will decide for you, and let's just say their choice might not be the one that saves you the most money.
Right, we've covered the taxes, but what about the day-to-day reality of actually owning 2 homes at the same time? It really is a juggling act, and it can be pretty stressful. Let's talk about the practical side of things for a minute, and how to manage that financial pressure.
Let's just be honest, the financial strain can be really tough. You're suddenly looking at 2 mortgage payments, 2 lots of council tax, double the insurance, plus all the general maintenance and upkeep. It's a lot to handle, especially when you have the added stress of not knowing how long it'll take to sell your old place.
Now, if your old home isn't selling as fast as you'd like, you could always think about renting it out. This can be a really smart move to bring in some income and cover your costs. But it's super important to remember that rental income is taxable, and being a landlord can affect your capital gains tax situation down the line. It's a great option, but it definitely requires some careful planning.
Wow, we have covered a lot of ground, haven't we? So now let's pull all of that together into a simple, step-by-step plan to help you move forward with real confidence.
So here are the absolute key takeaways. First, you have to budget for that 5% stamp duty surcharge. It's a big upfront hit. Second, remember you have 3 years to sell your old home to get that money back. Third, keep a close eye on that 9-month tax-free grace period for capital gains. Fourth, don't forget to tell HMRC which home is your main residence within 2 years. And finally, just be realistic about the day-to-day costs of owning 2 properties.
Feeling a little bit overwhelmed by all of this? Yeah, that is completely normal. The rules are complicated, and let's face it, the stakes are incredibly high when it's your home. But the really good news is, you absolutely do not have to figure all this out on your own. This is exactly where professional advice can make all the difference in the world. The team at My Tax Accountant are absolute experts in property tax, and they can help you navigate this whole process with confidence. Give them a call, send them a message, they're there to help. You can reach them on WhatsApp or by phone at 07854 255 375. Or you can just drop them an email at info@mytaxaccountant.co.uk. And hey, while you're at it, don't forget to subscribe to their YouTube channel for more brilliant tips and updates. Thanks so much for joining us.